SpaceX is poised to set what could be an IPO record, marking a historic moment in the commercial space industry's evolution toward public markets. This potential record-breaking valuation reflects the extraordinary investor appetite for companies operating at the intersection of advanced technology and space exploration, demonstrating how dramatically market sentiment has shifted toward private space ventures over the past decade. Bank of America is warning investors to exercise caution and consider taking profits as the financial institution voices concerns about market overheating in the technology sector. The warning comes at a critical juncture when many investors have become increasingly bullish on aerospace and defense stocks, suggesting that major institutional players are beginning to question whether current valuations are sustainable given broader economic headwinds. Red flags are multiplying across several key metrics that analysts are monitoring closely in advance of any potential SpaceX offering. Market observers have noted rising interest rates, geopolitical tensions, and supply chain disruptions could significantly impact the company's operational costs and long-term profitability projections that might be presented to investors during an IPO roadshow. The commercial space sector has experienced remarkable growth over the past 5 years, with companies like Virgin Galactic and Axiom Space capturing investor imagination and capital. However, this explosive growth has also created questions about whether the valuations assigned to these companies reflect realistic near-term revenue potential or are primarily based on long-term speculative scenarios. SpaceX's current private market valuation already places it among the most valuable privately held companies in the world, a distinction that reflects Elon Musk's ability to execute on ambitious technological goals while simultaneously managing investor expectations. Analysts have suggested that translating this private market valuation into an IPO price will require careful consideration of comparable companies and market conditions at the time of the offering. The potential IPO comes at a time when public market investors are reassessing their tolerance for companies with high growth potential but uncertain paths to profitability. SpaceX's diverse revenue streams, including government contracts, commercial launches, and the emerging Starlink satellite internet business, provide multiple avenues for future growth that appeal to long-term institutional investors. However, Bank of America's cautionary stance reflects broader concerns within the financial services industry about whether equity markets have climbed too far too fast without adequate regard for underlying economic realities. The bank's research team has pointed to elevated valuations across technology and aerospace sectors as potentially unsustainable should interest rates remain elevated or rise further. Investor sentiment around space-related equities has become increasingly frothy in recent years, with retail investors particularly enthusiastic about companies operating in this sector despite limited near-term profitability expectations. This enthusiasm has sometimes outpaced fundamental analysis, creating what some market observers characterize as a bubble in space technology stocks. The SpaceX IPO could serve as a major test of investor appetite for large-cap technology and aerospace offerings in the current macroeconomic environment. If the company prices its shares aggressively, it could set a bullish tone for other large private companies considering public offerings. Conversely, a more conservative pricing could signal investor caution. SpaceX's Starlink division has emerged as a significant revenue driver and strategic asset that differentiates the company from traditional aerospace contractors and competitors. The potential for Starlink to generate recurring subscription revenue from millions of customers worldwide represents a business model fundamentally different from traditional government space contracts, which should resonate with growth-focused investors. Government contracts have historically provided SpaceX with stable, predictable revenue streams that support the company's research and development activities in pursuit of more ambitious technological goals. These contracts, secured through competitive bidding processes, represent essential validation of the company's technical capabilities and reliability in execution. Supply chain vulnerabilities have become increasingly apparent across the aerospace and defense sectors, with global disruptions affecting component availability and manufacturing timelines. SpaceX's ability to manage these challenges will be scrutinized by potential IPO investors as a critical factor in the company's ability to meet operational goals and deliver shareholder value. The broader space economy is experiencing significant growth as governments and private companies invest in satellite communications, Earth observation, and space-based infrastructure. This expanding addressable market provides multiple pathways for SpaceX to capture value and deploy capital toward strategic initiatives that could enhance long-term competitiveness. Elon Musk's track record of executing ambitious technological goals has built significant credibility with investors and customers alike, though his public statements have occasionally created volatility in share prices for his companies. His leadership style and strategic vision will undoubtedly influence how potential IPO investors perceive the company's long-term prospects and management quality. International competition in commercial space is intensifying, with companies from Europe, Asia, and other regions developing competitive launch capabilities and satellite systems. SpaceX's technological advantages and first-mover position in certain markets provide competitive moats, but ongoing innovation will be essential to maintain market leadership. Regulatory considerations surrounding satellite internet operations, export controls on space technology, and international treaties governing space activities could impact SpaceX's business operations and growth trajectories. Potential IPO investors will need to understand these regulatory dynamics and how they might affect future profitability and expansion opportunities. The valuation question looms large for potential investors, considering whether SpaceX represents appropriate value at the anticipated IPO price range. Historical precedent suggests that newly public space and technology companies often experience volatility in their first trading periods as market participants calibrate valuations based on real-time supply and demand dynamics. Bank of America's recommendation to take profits suggests that current market conditions favor risk management and position reduction for investors who have already accumulated significant exposure to aerospace and technology stocks. This cautionary stance reflects professional concern that recent market enthusiasm may not be fully grounded in fundamental analysis and realistic growth projections. The decision about whether to participate in a potential SpaceX IPO ultimately depends on individual investor risk tolerance, portfolio diversification goals, and conviction about the company's long-term prospects. Financial advisors have suggested that careful analysis of the prospectus and market conditions at the time of offering will be essential for making informed investment decisions.